Let me welcome on the show Nischal Maheshwari, is a market expert, joining us now with more expert take and perspective on the market momentum. Nischal, always a pleasure to have you on NDTV Profit. Now, my first question, of course, we see the record-smashing levels when it comes to the key indices, but the wider participation is not as much. What's your view, and also what are the factors you think are really impacting this momentum?
Hi, afternoon, Nisha. Thanks for having me on the show, and welcome to your viewers also. So I think, first of all, congratulations. After 14 months, we have hit the peak again.
Yes, yes.
So I think congratulations to you, investors, everyone. I think it's been a long wait because if you really see, there's very little issues as far as Indian economy is concerned. I think we were at in a very good state in the last 1 year or 14 months, but still we took that much time to come back here. What I see here is basically that at this point of time, there is some amount of profit booking. As I was telling you, it's after 14 months. And people who have not seen returns for more than a year, basically, they want to actually, they are not sure that this is a sustainable rise. So I think you will see this kind of profit booking happening. But what is heartening also is this is the second time in the last 10 days that Nifty hit a new high. So it is trying, and I think it's only a matter of time before it breaks out of this.
It breaks out of this. So what is the next level as per your estimates, and how soon are we expecting this? How the basic question now everybody is asking, is there going to be a sustained Santa rally at the end of this year?
I think so, basically. Maybe not this year, but I think very shortly, basically in the next quarter, there is going to be a sustained rally. Now, what we have to look at it is saying basically what is the kind of valuation it can support. That was the reason basically you saw this, that the Indian markets are not performed, where the world markets, emerging markets especially, did very well. We were at around 22, 23 times at that point of time. And on top of it, we had only a 3.5% kind of or a 4% kind of earnings growth for FY25. Now, going ahead, given that we are coming from a low base, I think a 12 to 15% kind of earnings growth is likely to happen in 26. Now, on that kind of scenario, you can easily assume that Nifty will definitely outperform this 15% number. So a 15 to 20% kind of a growth next year for Nifty is not really challenging.
Right. So, Nischal, when you say that 15 to 20% of growth for Nifty 50, what all factors are you really incorporating in it, which will be kickers for the further momentum? Because looks like today's rally is already baking in the RBI's rate cut, some positive direction when it comes to the tariff talks with the US, and also US Federal Reserve also easing the monetary policy. Do you think that all these three have been beautifully baked in the market valuations currently, and the future factors that could be the kickers?
So I think rate cut, yeah, it is expected both in the US as well as India. I think that is definitely baked into the prices. But I think the major one which would drive the market up is the US-India trade deal. I don't think so. It is only an expectation that the market has seen this new high. But what will be the final number? Will it be 25% lower? I don't know. The market is not baking in any of that. And a deal happening also is basically not baked in fully, is what I would say. I wouldn't say that part of it is not baked in. Expectations are very high that the deal is likely to be announced anytime soon. But what will be the contours of that deal? I think that will finally decide where the market is headed. And if it is lower than 25%, because I think if Russian-Ukraine war is also sorted out, I think that 25% first has to go. And if it is a good negotiated deal, then we should be getting lesser than 25. And the lower it is, basically, the bigger the market jump will come through.
Right,
So
we are a lot dependent on how the US trade tariff deal really goes through, and anything below 25% is still going to be a very big positive momentum for the market. But Nischal, my question, what about the broad market participation? Because even in Nifty 50 components, we have seen only a handful of stocks which have really pushed up the contribution for Nifty 50 to reach the peak levels. When we look at the mid-cap universe as well as the small-cap universe, it's clearly underperforming in a day when both Nifty and Sensex have hit all-time high. So what about the broader participation in the market, Nischal?
I think the broader participation is sometime off, actually. The first thing is going to happen is going to be the large caps, basically, because they are the cheapest in the market, and more money will start coming back into the large cap because large caps earnings are much more stable, visibility is much higher, and they are cheaper also. So that's why I think the first money is going to come in, and even the FIs come back, they would be looking to buy the large caps only because that's where the liquidity is. Now, mid caps and small caps have their own challenges. Historically, we have seen basically that in a easing liquidity scenario, especially mid caps and small caps tend to do better. Now, what we have seen is that the transmission of this interest rate cut of 100 basis point is still not happened. So that's why we are seeing that the liquidity is not very easy. So subsequent rate cuts basically in the economy and the easing of liquidity will definitely help them. But I see at least a 3 to 6 month a time frame before the broader market starts participating,
Right.
and the valuations definitely are much more challenging as far as mid cap and small caps are concerned.
Right. So the two very important points you made, Nischal. One, of course, is that obviously, even if the liquidity injection is given by the RBI and even by US Fed, it will take 3 to 6 months for the markets or the companies to start benefiting from it. But given the fact that our earnings was much better than the expectation, what are the other factors that could really be a challenge going forward on your radar? Because we've had some very good news coming in right now. Any factors on your radar which could add to the challenge in the market and contrary to what we are expecting right now of the gains of Nifty 50 going forward in 6 to 12 months?
So it should be surprising, but low inflation has become a challenge for India. Now, this is, I couldn't have imagined this, but it has happened actually. And now the real GDP is 7.5, and nominal GDP is only 8.5, and that is impacting the earnings growth. Now, in a growing economy like India, a 4 to 5% inflation is really not really worrisome. And
Yes.
I think too much focus on the inflation side, I think it has caused this issue. But I think government had this foresight, and that's why they have cut taxes first, thereafter cut the GST. They realized that this is going to come up sometime, and but then this has already hit us. So we have to go back to a 10% plus kind of a nominal GDP growth for the earnings to come back again. So
Yes.
now that is my worry. If
Yes.
this low inflation still continues for a quarter or two,
Yes.
at least for the next quarter, it seems that it's going to be low inflation only. But then the base will start kicking in, and on the first quarter of financial year 26,
Yes.
financial year 27, basically, you should be okay.
Right.
So
So, Nischal, very important point again that lower inflation, is it a cheer or a fear? We have to go forward and see and how it really impacts the overall economy. But one last question, any sectors you see as underperformers or outperformers going forward? Any outlook on the sector specific?
So sector, I think it's more or less consensus basically. Financial should do well. They have not performed, and then the interest rate cut scenario definitely is going to help them. So I think financials is one which has already performed also. Maybe this could be a good time to start accumulating IT, but you have to keep in cognizance that the performance, the numbers are not going to still come in for at least a couple of quarters more. But given that the stocks are underperformed, they are cheap, so one should become equivalent weight on IT. I think consumers have already done their part. So you should be cutting your weightage on consumers to a sort of a neutral now. Energy is one thing basically which I think should have a good time. So energy should be now overweight in the portfolio. Metals, energy. So I think that's where it looks like interesting.
All right, Nischal Maheshwari, very, very valuable insights on the markets on such a momentous and a historic day for markets. Thank you so much for joining us with all your insights. Thank you.